Now, what we see pre-market is that yields are generally trending to the upside. Again, this is the 10-minute chart of the 10-year yield. Now, the reason why this is important is because Friday afternoon, and notice how this came out on Friday, Moody's did this on purpose. And honestly, not a bad thing, because if it came out during market hours or pre-market, the markets would have collapsed. They basically downgraded the U.S. debt rating to negative. I'm sure we all heard about it at this point. Now, again, the only reason this matters, and it doesn't really matter too much in the near term, is that ultimately the lower the debt rating of the U.S. gets, the less control the Fed has. Now, let me explain this, right? So we're all conditioned to think that the Federal Reserve can raise interest rates, can lower interest rates, can hold interest rates, and that they basically can control everything. That is incorrect. Really, what it is the market will control it. They're guided by the Fed. But the fact is that at some point, the Fed will lose control of interest rates. How does this happen? Well, look at what happened on Friday. Moody's downgraded the U.S. debt to a negative rating. Ultimately, let me ask you this question. Let's say the economy goes into a spiral here in the U.S., that we see, GDP going negative, recession, maybe even depression. The Federal Reserve lowers interest rates down to 2%. So not as far as it was, but from basically 5.5% to 2%. However, the U.S. has a negative debt rating. Other countries which are buying the U.S. debt and giving us billions, if not trillions of dollars per year, they say, listen, we're not going to just take 2% as a yield or an interest rate on your debt if we're buying your debt, because we don't think, based on your negative rating, that you're ever going to pay us back. So we're going to demand 6% or 8% or 10%. So the Fed's saying, oh, we're lowering to 2%, but no country will give us money without us giving, let's say, 6% interest rate. That's the market that will eventually wrestle control away from the Federal Reserve. And that's what we have to be worried about here. When that happens, folks, that is the end of this game. That is the cataclysmic end to this debt-laden society and world that we live in. There will be an economic reset at that point because, again, it's unsustainable at these levels of debt in the U.S., nearing $34 trillion. Look at Japan, look at China. I mean, it's everyone just spitting out debt. Eventually, people will not be okay with buying other countries' debt when there's no chance of getting paid back. All right. Going back to the charts right here, yields are inching up on the 10-minute chart. What do you guys think that the S&P is doing if yields are going up? And the answer would be we are inching down. So remember the relationship. Right now, when yields go up, the market tends to inch lower. Now, listen, this is not a big sell. I mean, this is a Monday. We're closing in on the Thanksgiving holiday, a little over a week away. But again, you see the correlation. Yields going up, markets will come down just a little bit. Now, couple charts I want to go over today because we do have some interesting stuff. We're going to go over large caps. Then we're going to go over crypto because really on this weekend, there was a lot of amazing action in cryptocurrency. Not so much in Bitcoin, but more so in the altcoins. To me, blow off tops across the board, euphoria, all the signals that probably mark a near-term top. Not necessarily a long-term top, but at least near-term top. All right, so first and foremost, we got to take a look at this chart. I found some amazing trend lines on these mega cap techs that we are into. Now, first off, one of the most amazing rallies in Apple, right? I mean, basically nonstop upside. 1, 2, 3, 4, 5, 6, 7, 8, 9. Got a little down day here, but ultimately touching this level. But look at the chart. This is what absolutely blows my mind, is how the chart can align. So we are into major, I repeat, major resistance on Apple. And Apple is also overbought. Take a look at the RSI when you have a chance. But basically, look at this area to this area, and look at what we're hitting right here. In addition, take this low here, which mirrors right down here, and we have essentially a parallel channel. So we've seen Apple go from the absolute low of the channel to the absolute high right there. Then take this same pivot point here, stretch a trend line to this pivot high, and look at the coordinated level on Apple. That's some pretty cool stuff right there, folks. Again, all I'm doing is playing connect the dots, just as if I was a kid. This is why I think, honestly, everyone should be able to do basic charting. And by the way, should you be able to know that this trend line exists without even drawing around a few? No. part of what I do, and I want to be honest with you guys, part of what I do is I say, oh, well, what if I connect this to this or this to this? As long as you're choosing major pivot points, play around with it, because eventually you may find a trend line that makes a lot of sense, and it gives us a confluence of resistance levels right up here. All right, so right off the bat, we know Apple is into mega resistance. Next up, another tremendous mega cap with epic resistance right in this range. All right, let's zoom on out. We got to go out a long way here. All right, so basically what we have here is we have a trend line, right? And what we're going to do is we're going to zoom in a little bit. So I want to be able to show you all of these levels. So look at this. Here's the previous pivot from the 2021 high. Remember, this is when basically the bull market ended and we went into that down move in 2022 into 2023, right? So what we have is taking the highest point from 2021, connecting it to this highest point here, and look at where price has come back to, right into that level. So perfect trend line connecting. This trend line did get hit on Friday. So, versus the NVIDIA one that, you could still go up another $5 on NVIDIA, it looks like. But then, just like with Apple, just like with some of these other ones, take a look. We take the lowest point of 2023, connects to this second low, connects to this third low, connects to this fourth low. Then, look at this. We break below, we hammer back on it right in here, we break down, and we retrace, and we're right there. That's what I would consider a bullseye opportunity. So I guess my point is this, and I'm not going to continue to go over a million of the mega caps. Granted, there's not that many, but my point is this, is that this is a pivotal week. If these charts are correct, these large caps should stall out this week and get some sort of pullback. Okay, and again, like I said, NVIDIA may still go up a little bit before it pulls back. But these are, when you get long-term trend lines like this that converge on a level, that is big. That is big. I would say that's an 80% chance. And remember, everything I do is probability-based. But basically 80% chance that we see some sort of pullback. Now, what we don't know is it going to be a $5 pullback or a $15 or a $30 pullback, right? That's the question. Is it going to be a pullback that makes a bull flag before another move up, or is it going to be a reversal move to the downside? That you don't know. That's only going to be revealed as we see the pullback, right? So again, you have the move up into resistance. You don't know, is it going to go like this, which is a bull flag? Is it going to go like this, which is a reversal? We have to wait and see. And this is the beauty of it. Remember, folks, a chart is like a puzzle. Every day, every candle, or whatever time frame you're trading, is like a new piece of the puzzle. You're taking that candle, you're putting it in, and reevaluating what the puzzle is showing us.